Hello, investors. Thanks for the interest in the Colorado Springs development project. I have the pleasure to be here with Rob Fuller and Jared Garfield. These are our development partners on the new build and new construction. This is a very exciting opportunity. As you all well know, the majority of our business model is mainly turnkey investment property and single family rentals that are build to rents. From time to time, we will have different opportunities for private money lending available on larger scale projects such that we're talking about today. So I'm going to run through and do a quick highlight of the overall investment opportunity. Again, we have Rob Fuller and Jared Garfield with ROI Property. We partnered with them on many deals in the past, and we're doing some very exciting development on high-end homes in Colorado Springs. This is in the Saddle Ranch development. We're building 208 high-end homes in 4 different phases. We're opening this up in the last stages of our fundraising for investors. We're 95% funded to this point, and we just have the last 5% that we're looking to raise to really kickstart the project. The builds are starting in April. I'm going to let Rob and Jared go through the exact presentation for you. But essentially what we're looking for are investors to invest a minimum of $100,000 at a 9% fixed interest rate. This is paid to you on a monthly basis, and then you'll receive your initial capital back at the end of the project. This is a 2-year term is what we're looking for. There's no cap in what you can invest, and actually there's a tiered interest rate where you are able to achieve a higher interest rate the more capital that you invest, and we'll go through all of that. You don't need to be an accredited investor. This is a debt raise. There's plenty of equity in the project to the development stage that it's at already. And so your investment is secured by the equity that we have, as well as a promissory note from our development partners. So Jared and Rob, why don't you take just a little bit of time to tell us a little bit about yourselves, and then we can move into the actual presentation.
Hey, thanks, Zach, for the introduction. I appreciate that. Jared will introduce himself next, but I'm Rob Fuller. I've been investing in real estate for a little under 15 years. We've done a number of flips, about 400 plus flips over the last 10 years. We've held a number of rentals. We've done some multifamily investments. Most recently, last month, we sold a 126 home development to a hedge fund. It was build to rent project. We have a number of those in Atlanta that we're continuing to work on. This project that we're going to be talking about is in Colorado Springs, also a fantastic market. We love what we do, keeps us going every day, and I'm excited to share this project with you. Jared, go ahead.
I've been in real estate investing for a little over 20 years, had a Fox News radio show on real estate investing for about 3 years, and have written investment articles for a lot of the top real estate investment magazines in the country. I'm a licensed real estate broker in Georgia and Alabama, and have done extensive turnkey investment properties in about 6 states. And so we've done about 3,500 properties as a team over the last 10 years or so. Rob and I worked together on about 400 properties in Huntsville, Birmingham, and Montgomery, Alabama. We did some stuff in Kansas City and a lot in Atlanta. Recently, as everybody knows, probably it's gotten so much harder to get investment properties. The foreclosure moratoriums really have not helped that at all. And so build to rent has become a really huge thing. And then also being able to do subdivisions to meet the demand for housing in markets that are exploding with growth and don't have enough inventory. So we bring about 100 years worth of experience combined with our executive team on to some of the different subdivisions that we've done. And we really are excited to tell you about this project today.
That's great. Yeah, Colorado Springs is one of those markets. I'm personally invested there on a number of projects. I live in Colorado. We see it and live it every single day. Colorado is just exploding, and there's definitely a shortage of housing. So just to be clear, the project that we're developing, these 208 houses, are for residential use. These are not build to rent. This is a high-end community, a high-end housing that Rob's going to explain here. So without further ado, let's, Rob, go and jump into the presentation and kind of go through that.
So this investment opportunity is in Saddlehorn Ranch, which is just right outside Colorado Springs, just a few, maybe 30 seconds outside of the city lines there. So it's got a county feel with all the city amenities. It's a wonderful development. We originally went under contract about a little over 4 years ago. We closed on it a little over 2.5 years ago, and we've been in the entitlement process for the past 2.5 years with final entitlements coming just recently, and we begin moving dirt this upcoming week for development. Having said that, we'll begin building homes pretty immediately as soon as in May. So as an overview to our kind of what we're going to be talking about today, these are the different items, and we'll send out this deck. But Colorado Springs is an incredibly hot market. Just this last year, we saw 20% year over year growth in home prices. Obviously, we've had additional growth in the past 3 years. It's about a total of 35% when you look at since we closed on the project. Fantastic market right there in the foothills of the mountains there next to Colorado Springs and south of Denver. We've got 218 2.5 acre lots. We're going to build over 5 phases. Floor plans range from 3,400 to 5,000 square feet, including the basements that are there. There are some optional upgrades and things add additional square footage if people choose as well.
One of the things I really like about this project, Rob, is the 2.5 acre lot size. It's a real differentiator. There aren't a lot of other homes, with the median home cost being in the 435, 440 range. There are very few homes that can offer the kind of lot size that we have. And a lot of people in Colorado like to have toys. They like to go snowmobiling. There's a lot of equestrian area out there. People love horses. And so this 2.5 acre lot size is really a great feature for a lot of people.
Yeah, absolutely. People don't always like for their neighbors to be able to look in their windows. So this is for exactly those people who want to have that space, and especially during COVID, we've seen that, especially people moving out of the bigger cities to get a little more space. They have, like you said, they can get a cow, a horse, chickens, anything they want. So it's nice. So to give you some approximate timeline, essentially in Q2 of this year, we're going to start the first 15 homes. We'll break ground on those. Simultaneously, we also have the development happening for these 218 lots. But these first 15 homes will begin in early May. We'll build those homes and sell them in Q3. During that time, when we sell them, I already have over $5 million of equity in the project. So as those homes are sold, and we'll talk about that as we talk about your investment, my equity will be released, and I'll be able to pay investors. That'll be used to pay investors back their capital. So those closings will be in Q3. And we put a projected payoff in Q3 of 2022. That's not quite 2 years of the note that we'll talk about, but we gave ourselves about six extra months of buffer in that note that we anticipate about 18 months to pay back. So the project completion, you can see, goes quite a lot longer than the time for which we need to borrow money. But that's because after we get to a certain point, the project sustains itself, and the capital from the project after we pay you back can continue to build homes.
I assume there's potential opportunity for people to even reinvest into the project again, right after their initial payback.
Sure, there's opportunity for that. There may be other opportunities as well. We can kind of pursue that as we get closer to it. So absolutely, yeah. We've got a couple of myself and Billy. I don't have a recent headshot of Jared, so unfortunately he's not on this. But we've got some bio on Billy and I. But I don't know if you can see that. Basically, what we've got is, this is my track record over the last few years. But we've got a number of multifamily projects. We currently own a 353 unit apartment complex in Charleston that we bought in October. A number of different projects where we've built for either sale to end buyers, residential, or as build to rent. Some of them are ongoing, but most of them are wrapping up right about now. We've owned and held a number of rentals, both in multifamily and in single family residential rentals. So a couple of our testimonials of people who have worked with us in the past, and Guerrilla Capital on the left here is actually invested currently in the development portion with us as well. That's a little riskier. So what we're bringing to the rent to retirement group is the home build portion. So the development is being done by Guerrilla Capital, and I've got $5 million in there as well. But these are a couple of people who have worked with us. Many of them have well-respected names within the real estate industry. Guerrilla Capital is based out of Eugene, Oregon. He's invested now far more than 18 million. It's probably close to 30 million with this project. He's seen good returns with us. Jay Heinrichs, coincidentally, is also up in Oregon, and many of you know him if you're on Bigger Pockets. He's got a big presence there, but he's invested millions with us as well. and seen great returns. So those are both good people that can vouch for us. Running through the financials a bit, there's 218 homes total. Essentially, the capital we're raising for this is going to be used on these first 49 homes and a few of the phase 2 homes as well, just as until we get that perpetual return of capital that allows the project to run on its own capital as it produces profits. But the big number here is we've been very conservative in these. As you can see, we put lender costs of 10 million, and we won't be up that high. We put a contingency of 10% as well, which is exceptionally high. But even with all of that, there's about $14.5 million of profit after paying all costs.
What you've done here is you've really been very conservative in all the numbers. And so we're trying to make sure that we can underpromise and overdeliver.
Right. And we found that that's an easier conversation. And that's, again, why we have this, even though the project completion is in December 2023, and we think we'll have the money back to you in 18 months, we put it, the notes going for a full 2 years. Again, it's the same concept. We want to underpromise and overdeliver. And so we feel really confident with these numbers. We're guaranteeing it personally, as well as the project obviously has a bunch of equity in it of our money that you'll be secured against. But this kind of gives a quick overview of what we anticipate for profits. We usually like to talk about risk because ignoring them is silly. Essentially, there's concerns out there at any given time by anybody who may be out there. Is market declines, cost of material increases, and many of you have heard about those. We never want to brush over those as if they're not real. We absolutely 100% agree that risks are things that need to be weighed in heavy consideration before making an investment. One of the nice things about Colorado Springs, I'm an Air Force brat. My father's a colonel, as an Air Force physician for 28 years, and then retired and continues to work on air bases as a civilian. But the nice thing about Colorado Springs is it has multiple military bases, Space Force for the next few years until it'll always have a presence there. But I believe that Huntsville is going to be the center for that. But this has got 2 Space Force air bases or Space Force bases there as well, Peterson and Schriever. In addition to that, you have all of the PhDs that come along with research. You've got a huge diversity of other employers. Basically, within the last couple of years, it was reported by a large Denver newspaper, that Colorado is anticipated to be bigger than Denver by 2050. That's one of the ways that we hedge. We have a nice, well-rounded market. In addition to that, we don't build speculative home builds. We begin the home build process when we have a contract in hand by the buyer. So we're not spending money to begin building homes for an unknown buyer. We will have a contract in hand before we start building those homes. So we already have a waiting list of over 100 people that have expressed interest. It's in huge demand. We haven't even put it on the MLS yet. This is just people that have driven by the land and have seen the sign. And the reason it's not on the MLS yet is because the APNs are still being issued later this month, the parcel numbers. And so then we'll begin writing contracts, and we'll have those 15 contracts before we break ground on the first 15, and then later for the other homes as well. Cost of material increase, we have the ability to purchase, and this is a fairly common for developers and builders to buy options or futures on lumber to mitigate against cost increases. So we'll do that. Additionally, we've seen some home price appreciation as a result of the crazy home markets in the last 6-8 months. So, and then the concern about, well, what if homes don't sell as fast as expected? It goes back to that, because we're building only on homes we have contracts for. We won't break ground on a home we don't have contracts for. So if it turns out that home sales aren't as fast as we believe they are, and that for whatever reason they decline, then we can redistribute the capital back to investors and wait until it picks back up. But we've got more than enough equity in there to ensure that we're there. Jared, did you have anything you wanted to add there?
No, I think that's really good. I think the fact that, if homes don't sell quickly, the fact that we don't have to build them, we can always return capital, keeps investors really safe. And I like the fact that we have the ability, potentially to even purchase options or futures, on things like lumber and stuff like that to mitigate against potential cost upsides. So really, I think this is a lot of security. We've really thought through things, and we've tried to come up with everything that we could think of that would be a risk that our investors could be exposed to.
So as you know, new home builds are very dependent on the local economy. So we want to cover that, the local market for single family homes. We'll talk about the Colorado Springs economy and the housing market. The first is this is a map that kind of highlights where we're at. We're just kind of the east of town, but town is growing east. On the west side, it's hard to see, but that's where the mountains are. So the town is growing east, and the development's all east, and there's some coming down from Denver as well. And they've actually built a new highway that goes from I-25 out east as well. So we're seeing enormous growth in that market. These are some of the Fortune 500 companies that have a presence in the market. Obviously, we've got the military bases in there as well, but there's an enormous amount of growth because of these strong and diverse economy. On a number of years, I think we just have 2019 listed here. The economy was ranked number 1 by U.S. News and World Report. It was also ranked number 1 most desirable place to live in the country. Colorado Springs was, from more than 1 year. Within the last 5 years, it's been, I believe, twice. But you can see there's a lot of U.S. News and World Report, Denver Business Journal, a Wallet Hub, USA Today. Got a lot of big organization, Forbes, top 25 places to retire. You've got a number of strong sources that have ranked it very desirable place to live and a strong place for business growth. So,
I like that it's best for several different topics. Best place to raise a family, best place to retire. So I mean, we're hitting several different demographics here. Whether it's a baby boomer that wants to buy a very nice $500,000 or $700,000 home and wants to enjoy the lifestyle of Colorado Springs with all the beauty and the Garden of the Gods and the mountains, or whether it's a family that wants to raise their family there. There's really a lot going on. There's a lot to like about the quality of life of Colorado Springs.
Well, and they actually get more sunny days than San Diego there, right? Which is often touted by people in that area. That and Denver both kind of tout that it's got more clear days, which is also one of the, I think, why it makes sense for the Air Force there. But you're absolutely right. It's beautiful, and the cost of living there is even less than Denver, let alone California, where a lot of people are leaving, and New York are leaving to migrate to Colorado. So this got the sports industry. Obviously, if any of you follow the Olympics, that's a huge presence. John Helmick's a treasurer for the pentathlon. He's involved in the development. He's the treasurer for the pentathlon. He's heavily involved in the U.S. Olympic organization and world sports. But we've got aerospace and defense, $7 billion annual economic impact. Lots of trails, outdoor open spaces, plenty of restaurants, lots of very diverse kind of living experiences. What we've seen, and some of these, even though they have a down, I would put a green to make an indication that this is a good thing, right? Inventory levels are down, and the reason that's good is that means the demand is high, the supply is low, which is part of the reason that we have the average days on market is 17 days. And the average supply right now is hovering around a half month. And for those of you who know real estate, about 6 months is considered balanced. Depending on who you ask, it may be a little higher than that or lower than that. But regardless, half a month supply is considered obviously a huge demand and a very low supply. So we continue to see the increased pricing, and the number of units is increasing, even with the number of units available declining. So some key takeaways from the market in general is supply is down. If you look at this chart over the last 10 years, it's down 90%. And the reason that's true is in December, we saw 530 homes on the MLS. We're down below 300 now in Colorado Springs. So there were times where it was up as high as 5,028 in April of 2011. Obviously, that was still kind of recession recovery timeframe, but we're now down below 300 available homes. Demand is increasing. You've got over 8,500 people who moved to Colorado Springs with only 300 homes available on the market currently. That's obviously that's going to be a housing problem, which is what we're attempting to cure. And this is the quote from the Denver Post that talked about it being Colorado Springs being larger than Denver by 2050. So there's some key takeaways there, more supporting data to talk about growth in home price and median sale price. Jared, you've driven out here a lot, and so have I. But there's a little airport. This is a kind of a zoomed out Google Maps view of where we're at on the corner of Judge Orr and Curtis Road. We've got the Walmart Supercenter kind of over here on Highway 24, which is Falcon Highway, and then Meridian Ranch is kind of in the upper left-hand corner there.
One of the things I would highlight about this area, I mean, it's hard to tell from just the aerial views, but this is in the path of growth. This is the area of Colorado Springs where you're seeing the best appreciation. This is where the home prices are really, really growing up. All of this green area in the upper northwest corner of the map, that Meridian Ranch, is a huge development. You can see the little lake here, and we weren't able to zoom in, but there's another big, massive phase just north of where this little lake is here. And they're going to be building homes that are selling in the same similar price points of what we're selling, but instead of being on 2.5 acre lots, a lot of those are going to be on 1/4 acre or 1/2 acre lots. And so we've really got a nice location here where you can see the development here at the right. We're close to the airport. If executives, and upper middle management people want to fly in, they can right here and have close proximity there. But the shopping up and down this whole corridor here, it's just everything's completely brand new restaurants, brand new shopping centers, brand new libraries, brand new schools. This is where you want to be. If you're in Colorado Springs, Falcon is the area that's really emerging and growing and exploding with everything being new. And you don't really get that in downtown Colorado Springs. It's built out. Everything's 1960s, 1970s, 1980s, until you get north of town, closer to Castle Rock. So if you want to be in a newer home in some of the better schools in the growing development area, this is where it's at. And so I love the location.
Great. And just east of us, there's $1 million homes that are being sold. We're starting at $599. And like he set up in Meridian Ranch, which is what he indicated over there, those are anywhere from 6,000 square foot lots plus. So they can be actually smaller than 1/4 acre lots. So this is the phasing. This was phase 1 and 2. It had to be broken up into 2 because of how it was. But we're starting in that lower left-hand corner of the development and building out 49 lots and then 42 in phase 2. I included a few floor plans. These are just samples so you can get an idea that were provided by our builder. You can obviously, there's lots of different exterior finishes. We won't go into too much of that because we'll have some continued changes to some of these floor plans as we continue to get closer. But we basically, to give you examples of what it might look like, this would be the first floor. There would be an optional 3rd car, pricing on that. One of the things to note, I said we start at $599, but almost everybody there, 95% of everybody upgrades to a basement, whether finished or unfinished. So we didn't even include the option for not having a basement here because almost everybody upgrades. So essentially on a basement, a finished basement, we're in it for $366 plus the purchase of the land price. There's plenty of profit in there on a home build there. So another floor plan that we held, this is a 2,062 square foot per floor. Lots of different elevations there, and this one has a few more optional upgrades there.
Rob, one of the things I would highlight, I mean, you see the elevation that these are nice homes, but we're using a Street of Dreams builder who's built, hundreds and hundreds of homes in the Colorado Springs area. He's a known entity. People recognize the quality of his builds. They like to try and buy homes from our builder. And as a Street of Dreams builder, they're known for the quality that they build and for being high end and having a home that's a cut above what everybody else is getting. So I think that's a real significant point.
Yeah. So for those of you who may not call it Street of Dreams, called Parade of Homes is the actual, he won #1 builder in the Parade of Homes in 2019. The last time they did it, they didn't do it obviously in 2020 because of COVID, but he won the Parade of Homes Home of the Year in 2019. So again, we've got some floor plans and pricing, and we'll have about 8 floor plans. So this is not fully comprehensive, but just to give you some examples of prices and floor plans. So to go in again, kind of circle back to this, what we're looking for is a $5 million raise. The project will go on longer than we need your money, but with expected projected payback in August 2022, we'll go for a little over a year past that. Proposed request is a promissory note due March 31st of 2023. The base interest rate that we're looking at is a 9%. We'll pay monthly on that. That'll come through ACH. That'll get paid to you. Then we'll do a bonus interest rate based upon investment amount. So if you invest 250, you'll get a bump at 2%, effectively giving you 11%. I'll let you read that, but essentially all the way up to about a 15% effective rate per annum. So a couple of the reasons that we do a promissory note is it's the simplicity of it. It's a zero liability for the investor. As an equity investor, what ends up happening is that there's liability, later from home buyers, and with notes with debt holders, you don't carry any of that liability, which is one of the biggest reasons we do a debt as opposed to an equity investment on these types of projects, because it's for up to 10 years. So that'll be myself and John Helmick that guarantee that. He's on the development side. Again, debt is paid back before equity, so you're paid back before I'm paid a penny of profit. And then the fixed rate of return gives you a solid, exactly what you're making every month and at the end of the project, as opposed to with equity, it fluctuates based upon performance. And that can be good and bad for some people, but we chose to do with the debt for the other prior reasons I mentioned. So the note is guaranteed by the land, the homes, our business, as well as a personal guarantee. So about $12 million of assets backing the $5 million of notes. So kind of gives you an idea of what we do with the promissory note. We can one-on-one talk a little bit more about that, and I can share that document with you. But we're going to put in an additional $2 million that as we sell some other projects. So the target raise is $5 million. In addition to what we have, we'll have another couple million we'll put in. The minimum investment we're asking for is $100,000 with an investment period of 2 years. Investor returns anywhere from 9 to 15%. The bottom right-hand little graphic shows that it's the promissory note holders are paid first, and then we're paid back next, and then obviously whatever's beyond that is profit. So if you'd like to contact us, we're happy to. We would like to speak with you one-on-one, give you more information, and share with you any additional questions you may have. And I know Zach's prepared some questions he thinks will be pretty typical, and so I'm going to kick it back to him.
Yeah, thanks, Rob. That was a great presentation. I think that a very exciting opportunity simply because Colorado is a high demand area. There's housing shortage, as you mentioned, and there's just you're building a beautiful project. And I think that the simple fact that you've removed a lot of the risk, being that you're actually not doing spec builds, you're building only when you have a contract. I mean, that just removes a lot of the risk in other type of similar scenarios, and you're highly invested in it yourself, and you have the equity in the deal. So all things considered, when you're comparing apples to apples with other similar projects that we've come across, I feel extremely comfortable, opening this up to our clients and partnering with you guys to do some fundraising. Let's go through, the important questions that people want to know is just how does the process work? What are the specifics? I'll do a quick highlight run through and then go through some questions that I've already received from a lot of our clients. But essentially, it's a 9% annualized interest rate, so it's paid out monthly. So $100,000, you're receiving a 9% interest rate divided up into 12 monthly payments. Mm-hmm. You receive your capital back after the term of the loan, which would be a 2-year term, potentially sooner. You have an opportunity to have an increased interest rate or achieve a higher return by investing more capital. But we're looking for a $100,000 minimum investment. Again, you don't need to be an accredited investor because it is a debt raise. And then it's secured by the equity that's in the project, as well as the personal promissory note. And obviously, we've extensively went through your track record and the builder's track record, so everyone can feel comfortable with that. But can you just walk us through, just in simplistic purposes, if someone is interested to do this, the next step after this is scheduling a one-on-one phone call with you or Jared, just to go through any additional questions that they may have, or simply just talk about how this is structured with the accounting and how to make the commitment and the fund or actually fund the deal. So can you just walk us through how that would actually work when someone is ready to say, hey, I think this is interesting, I want to pull the trigger, here's $200,000 to invest? What happens?
Yeah, I appreciate that, Zach. So essentially, we'll call, talk through any kind of remaining concerns or questions they have. We'll share with them the investment docs, which, because it's a debt, it's much simpler. It's a less than, I think it's less than 10 or 12 pages. Have to refer back to it. We'll send them that, have them review it, get real comfortable with it. They'll sign it. We'll sign it. They wire over money into the Saddlehorn Ranch LLC bank account, and you start building homes with it. It's pretty simple.
What about the accounting side? Are they going to be receiving monthly statements? Do they receive an end of year like 1099?
Yes.
And do you have someone that's handling the bookkeeping on your end?
Yeah, absolutely. So we use a firm called Leighton and Associates. Essentially, I can get you that information. And I think it's in the investment agreement as well, where it kind of outlines that. But they'll get a 1099 INT because it's interest income. What we'll do as well is we'll add you to the Builder Trend email update, which is basically Builder Trends, the software we use for building homes and development. And that way that individuals can see that are invested in it, they'll be able to see the project as it progresses. Our on-site people usually will visit 1 to 2 times a week. They'll post into that, and then you can kind of see what the progress on the project is. And so absolutely, they'll have transparency that way. Then we also do a monthly newsletter. A lot of that will be redundant if they're reading and looking at those Builder Trend, which comes with pictures and notes. So a lot of that will be redundant, but the newsletter kind of is one concise document that kind of goes like, this is what we started, these lots we started the home building. And so that's kind of the process for that.
Excellent. So just to recap, scheduling a call with you to go through additional questions, reviewing the paperwork, signing the promissory note, and filling out the loan paperwork, wiring the money over to the accounting firm handling that. And then the next month after that, they should start to receive their interest payments just via ACH transfer, and then receive the majority of their entire investment for their initial capital invested at the end of the term. And that's essentially how it works, right?
That's exactly right. Yep. And all along they'll have newsletter updates, and they can hop into our Builder Trend software and see the pictures and updates.
Yeah, that's fantastic. And I don't think we mentioned this earlier, but we are looking to raise just for the next like less than 30 days. So this is going to be opening up till April 1st. I'm sure we're probably going to be overly funded or have more commitments than we actually need. And so if this is something that you're interested, time is of the essence. Once we have raised the threshold, then we'll close this off. And builder starting in May. So this is something that if you're interested in taking part in this opportunity, we'll want you to reach out sooner rather than later, because we'll cut off funding once we're fully capitalized. Can you talk a little bit about people that have retirement vehicles, or, is that an option if they have a self-directed IRA, solo 401k? Can they invest? Can they not?
Absolutely. And self-directed IRAs, obviously the answer is yes. That's the short answer. The long answer is it oftentimes will be affected by whoever their custodian is, whoever handles that self-directed IRA. And so some of that will be just digging in with individuals once we get on a phone call and we can talk through it. The answer is yes. And we have many people that invest with self-directed IRAs and 401ks and different retirement vehicles.
Excellent. That's great. I think we reviewed a lot of the risks. Obviously, there's risks in everything, but how you have mitigated risk in this specific scenario is obviously you guys are already well capitalized. There's already quite a bit of equity. It's to the final stages of development. Investors are not funding a development, in the beginning stages. This is from ground up construction on the actual builds that already have a contract in place from someone to purchase the home. I guess worst case scenario, there's enough equity there that if investors' funds need to be paid back, if, like you said, there was a market fluctuation or something like that, there's enough equity to do that. And so I think that will allow a lot of people to feel very comfortable.
We have to stop building because whatever market, we stop building, the homes sell, and we return the capital.
Excellent. Well, I think that's going to answer the majority of people's questions. Really the next step or the call to action would be to schedule a one-on-one consultation with either Rob or Jared. and really get set up on how to actually fund the deal. So we'll include all this information in the notes, as well as we'll be sending out this exact PowerPoint to everyone that's interested, so you can go through it in greater detail. Rob and Jared, did you have anything else that you wanted to mention that came up?
No, I appreciate the time today, Zach, and thank you all for listening and watching. And we look forward to working with you.
That's great. At some point, we'll have be able to have a visit actually out here in Colorado Springs, where we'll be able to meet everyone in person and tour through the projects. I mean, this will be coming open invitations later. Get through the COVID situation, of course, probably later this year. But lots is happening in Colorado. As everyone knows, I live out here, and it's exploding. So we have people from all over the country moving to Colorado. It's a beautiful place to live, excellent place to invest, and huge housing shortage. So again, appreciate both of you guys' time today, and we will follow up with each individual investor that wants to learn more about this opportunity. Thank you for your time.
Thanks for having us.